Let me take
Hey.
Hey. Hello, hi DC. Hi.
Hi, Itay. How's it going?
Hi, good. Anand. This is
Nice to meet you. This is Anand.
Oh, great. So now we're just waiting for Michael.
What up, Zach?
Hey, everybody.
Hi, Zach. Hi.
How you doing?
Hi, Zach.
So now it's already live stream, by the way. Yeah. Just
Yeah,
let me...
it's so good to y'all. This is like some of my favorite people on this call. I don't get to see you all much these days, especially on a video conference. How you doing?
Hey, it's good to meet you.
Yeah, likewise.
Hi, Suzhu.
How are you?
Hi, nice to meet you as well.
Okay, so just it's already a live stream, guys.
Oh, great.
Yeah, I think it's all good.
Hey, Itay.
Hey, guys.
Hi, Itay. Hi. How are you? Hi.
Hey, how are you?
Hi. I think now we're just waiting for maybe Michael, and then we can start.
Great.
Yeah. Ooh. I don't know how many people are actually watching now. Let me check.
All right.
So, Zach, we finally meet face to face.
I know it's great to see you. We were supposed to meet face to face like 3 weeks ago.
Yeah.
And I was supposed to come to Singapore and Hong Kong, and obviously all of our travel plans have gotten canceled.
Yeah. How's the situation now? And you're in New York now?
So fortunately, I have a place in upstate New York. And we used to just come here like once a month on the weekend, but I've been here with my family for like 3.5 weeks now. And New York City is, it's pretty bad. They're setting up hospitals in Central Park and on a boat and in the conference center. The city is like, from everyone I talk to who's still in the city, it's like a total ghost town. There's no cars on the street. People are, not going out. So it's tough right now.
Sure.
Yeah, I'm still here, so it's pretty bad.
Yeah. Oh, Mike is here now.
Hey, guys.
Hi.
We're running a little bit late. Hey, Michael.
Hey, Michael.
So good. Hey, Michael. I think probably we can start officially.
Sure.
Okay. So really, good morning, good evening, and morning, everyone. So welcome to Crypto Tonight. So my name is Yama, and it's my great pleasure to be your host tonight. I hope you all stay safe. So today we are one. So now before we start, I just want to say for our talk tonight, we're going to have real-time translation in the thanks to ChainNews, bilingual journalist. And really, Crypto Tonight is about a place to share and a chance for the West to meet East, and hearing real experiences and opinions, and also to explore strategic partnerships, to pool our knowledge, and maybe find leading-edge solutions for the industry problems. And so to start with, so please join me welcoming our 6 fantastic guests. First, Zach, the CEO of BlockFi, based in New York. Hi, Zach. And
Hi.
And Sue, CEO of Three Arrows Capital, based in Singapore. Hi, Sue. Hi. And Anand, the CEO of Paradigm, based in New York. Hi. Anand.
Hey, guys.
Yeah. And Itay, the CEO of Curv Wallet, also based in New York. Hi, Itay.
Hey, guys.
Hi, and these are our 4 panel guests tonight. And we also have DC, the CEO of Hashkey. Hi, DC, based in Beijing.
Hi. I'm in Shanghai, actually.
Oh, Shanghai, sorry. China. And Michael, the CEO of Amber, based in Hong Kong and Shenzhen. Hi, Michael.
Hi, everyone.
Hi, Michael. So DC and Michael is going to be our watch guest tonight. So first, a brief introduction. So could you please tell us who you are and what you do and what your company does? Let's start with Zach.
Yeah, hi everybody. My name's Zach Prince. I'm the founder and CEO at BlockFi. My background prior to starting BlockFi has always been in venture-backed technology companies. And most recently, prior to starting BlockFi, I was in the online lending sector. And I was also very actively personally investing in crypto while working in traditional financial markets. And in early 2017, I had the idea that just like other asset classes, there was going to be a big need for debt and credit markets in the crypto space. And so we started BlockFi with that idea in August of 2017. And our platform has grown quite a bit since then. So we currently offer interest accounts where you can earn a high yield on Bitcoin, Ether, USD, and stable coins. We have a crypto-backed loan product, and we also have fee-free crypto spot trading on our platform. Additionally, we have an institutional services team that creates bespoke lending relationships with institutional counterparties all around the world. We're about 100 people with offices in New York, Argentina, Poland. We're opening an office in London in May, and hopefully in either China, Hong Kong, or Singapore very soon as well.
Of course, you can't miss the market China. Thank you, Zach. Next, Sue.
I'm Sue. I'm the CEO and CIO of 3 Arrows Capital. We're a hedge fund based in Singapore, started in 2012, focusing on foreign exchange trading as well as cryptocurrency trading. Before that, I had been a trader at various investment banks and high-professional marketing firms in Hong Kong, Singapore, and Tokyo. And so 3 Arrows now is a principal trader on major crypto exchanges as well as spot exchanges. And we also do investments in place for long-term believers in cryptocurrencies and values.
Thank you, Sue. So next, Anand.
Hey guys, my name is Anand Gomes. I'm co-founder and CEO of Paradigm. So Paradigm is an institutional grade messaging platform with embedded RFQ trading within it. Before Paradigm, I was an OTC trader trading interest rates and energy. But the idea for Paradigm was actually conceived of when I was on the energy desk. The problems of OTC trading are kind of very similar. No matter what asset class you transact in, liquidity is fragmented. There's tons of different venues. There's no standard for workflow automation, and so we decided to kind of solve all those problems in energy. And then we decided to start with crypto because we're early kind of enthusiast of crypto, but then also it was an opportunity for us to be a first mover in this space because there's absolutely no infrastructure. So the company started in 2017. We are about 7.5 people, roughly. We launched about just under a year, about 7 months ago.
Thank you, Anand. Next, Itay.
Hey everyone, I'm Itay. I'm the co-founder and CEO of Curv. We were founded in early 2018. We're based in New York with R&D offices in Tel Aviv. We're about 30 people in the company. My background is in cybersecurity. I used to always been taking traditionally on-prem solutions and moving them to become cloud security solutions. And this is exactly the idea behind Curv: how to take traditionally on-prem hardware-based solutions and make them accessible and more secure and available through the cloud. So Curv is a software-only cloud service. We secure any digital asset in serves institutions or any enterprise that holds crypto. We have custodians, exchanges, OTC desks. They're using us across the globe. We recently opened up our APAC office in Hong Kong, and we see increased demand in the Asia region. Great to be here. Thanks, Yama and the entire team for setting this up.
Yeah, thank you, Itay. So Curv has been very a low profile, but Curv has very big clients. We're going to review it later. Thank you, Itay. Thanks. Next, DC, Hashkey.
Hi, everyone. Good morning and good evening. My name is Dan Chao from Hashkey Capital. My background is in traditional finance. I started my career in one of the top 5 mutual funds in mainland China. And then in late 2011, I joined Wenxiang Financial Holding, and I've been working there under several subsidiaries until early 2018. I joined the founding team of Hashkey Group in Hong Kong. Personally, I've been got into the blockchain space in late 2014 and early 2015 with our first VC fund, Fenbush Capital, and our first investment into Ethereum. At Hashkey, we've been, together with our associated entities, we've been investing very actively over the past 6 years. So far, we have invested around 200 projects globally, deployed around $200 million US dollars as of the end of the last year. Some of our recent investments include BlockFi, Zengo, and in China, Mikey and Hashpark. Great pleasure to join this show tonight.
Thank you, DC. Thanks. So next, Michael.
Hi, everyone. My name is Michael Wu. I'm the founder and the CEO of Amber Group. Amber is an integrated crypto finance platform where users can access, trade, earn, and invest in cryptocurrencies. We aim to offer a smart solution and help our customers to access the entire market with just one account and enjoy institutional grade crypto financial services with us. We hope with our platform and products, we can help reduce frictions for people across the globe to adopt crypto, and hope by this can help with global crypto adoption. The company is now a team of about 127 people across 6 global offices: Hong Kong, Shenzhen, Shanghai, Taipei, Seoul, and Vancouver. The founding team of Amber came out of traditional finance and fintech companies, Morgan Stanley, Goldman, Bloomberg, similar to many of the here. Very excited to be here. I mean, they think, thanks Yama for having us, and it's exciting and it's new, and it's kind of fun.
Yeah, thank you, Michael. But you didn't mention to me that you already have like 170 employees.
They knew.
Impressive. Okay, cool. Thank you all. So next, let's move on to our 3 quick questions of tonight. Again, let's start with Zach. Hi, Zach.
Hey, Yama.
Hi, Zach. 3 questions. First, what's the most exciting thing that happened to BlockFi in the past 6 months?
Yeah, thanks. So we had a number of things happen. I couldn't really pick just one. So we raised our $30 million Series B round of funding. Thank you, Chow and Hashkey, for participating in that as an investor. We also launched our fiat on-ramps in the U.S. market for wires and ACH, and globally for wires. So for the first time in Q1, people have the ability to wire money from their bank account into BlockFi, turn it into stable coins to earn a high yield or trade crypto with it. And we also started working with institutional clients in China just in the last 6 months, which was really exciting.
How exciting when things are connected to China. Okay, second question. Name your 3 favorite types of clients or counterparties.
So servicing retail is kind of at the core of what we do. We only market to retail in the U.S. market today, but we think over time we'll be more focused on marketing to retail globally. So our retail clients are, at the core of everything that we build. On the institutional side, market makers and proprietary trading firms are the largest portion of our institutional, and as a result, they're my favorite. But we also work with crypto exchanges and Bitcoin miners as well.
Oh, more than 70% of the miners are actually in China. So welcome to China. So last question, what's the best thing about doing business with BlockFi?
Yeah, I think the best thing about doing business with BlockFi is our team. We're very fortunate to have just an incredible group of professionals, and it's very rewarding to me every time we hear our retail clients or our institutional clients say, working with BlockFi is like the best and easiest relationship that we have in crypto. So we try to be very professional, very available, and we've heard the feedback from our clients that they see that and appreciate it. So client service is the best thing about BlockFi.
I can prove that what all you said are true. Awesome. Thank you, Zach. Now moving on to Sue. Hi, Sue.
Hi.
Hi, Sue. So 3 questions for you. First, what's your 3 favorite cryptocurrencies?
I don't know if I have 3, but I have 2. I think BTC as store value and sort of the first chain of scarcity is something that has a lot of potential and has been around for 10 years. And I think the longer it's around, the longer it will become around. And the sort of focus of the whole global community toward one, sort of monetary currency, I think you're already seeing a lot of signs of that in the way that trading volumes are occurring and the way that people are buying and holding for long term. So I think BTC is a clear favorite for me. Second would be Ethereum, the Ether token on that network. I think that Ethereum has surprised a lot of people and not sort of dying off after the ICO bubble. I think it's shown a lot of utility. It took over a lot of the use case of Omni, where Tether used to move on Omni and now it moves mainly on Ethereum by ERC20. And I think that as a global settlement layer, Ethereum is very compelling. And I think while the smart contract, use cases are far less than originally conceived, I think that they are still very powerful and likely will follow in Amara's law, where it's very overrated in the short term and possibly very underrated in the long term.
Yeah, thank you. Of course, always the top 2, BTC and Ethereum, except on the April 1st day, we had a toilet paper token as the number 1 token. Thank you. So, second question, what's your favorite trading strategy of all time?
Well, for us, it's always been basis trading. And what that means is we trade futures and derivatives, swaps against the underlying spot markets. It's very balance sheet intensive. So we're fortunate to have relationships with like BlockFi and others in our lending space. And for us, there's a lot of opportunities there because the flows may not be the same in each market. Sometimes the market may be very bullish. It's all coming from the derivatives market. Sometimes they may be very bearish, but it's also coming from the derivatives market. So the spot buyers and spot sellers in the long term, that's definitely what drives the market, right? That's people truly buying coins, putting them away, buying coins and using them. But in the short term, we help link the derivatives versus the spot markets. And I think that helps us also find a lot of opportunities in market direction as well, as the March 12th event as well.
Sounds very simple, but very smart. Last question. What trading advice could you offer to the audience?
I think what's really important is to treat it like a business, treat it like a strategy. So just like getting in shape or any kind of self-improvement, I think it's important to have goals, write them down, and follow them closely. Because of the volatility of the markets, it's very easy to get emotional and get caught up when the markets are moving. So I think, the common scenario is the market goes down and it reaches the price you wanted to buy, and then you don't want to buy anymore. In fact, you want to sell because you feel pain from your previous holdings. I think thinking long term, if you're a long term investor, if you are a short term investor, staying disciplined and having a good way to benchmark yourself as well as rate how you're doing on an ongoing basis. For sure. Because many scenarios in crypto that seem very unlikely, they can still happen. They're non-zero. So risk management is crucial. Survival is always crucial.
Can't agree more. Risk management is extremely important. Thank you, Sue. Next, we will have DC asking 3 questions to Anand. DC, please.
Hi, Anand. I can see that you're still at your trading desk. That the crypto markets runs 24/7. So my question is, how many hours do you sleep every day?
Not enough. I don't think I should put a number out there, but it's definitely not as much as it should be. But yeah, I mean, it's 24-hour market, 24/7, 366. And so we're a small team, only about 7.5 people. And so like the math doesn't work there, right? So it means one of us or a couple of us has to have to like do these like crazy shifts, but it's fun. And we're building infrastructure in a space that's growing so rapidly, and to be a part of this early is truly a privilege. So we're less sleep, but definitely with smiles on our faces.
I can actually prove that Anand sleep like 3 or 4 hours a day, or actually probably less. Sorry, DC, please go on.
Okay. So secondly, we all know that compared to traditional finance, the crypto market is still it's in its early stage. So, what excites you the most in a space while building Paradigm?
Yeah, it's a great question. I mean, it's well, in a nutshell, really, it's trading 2.0, right? One of the reasons we decided to start with crypto was it's a fresh start, right? We came from all these different backgrounds, and we have this exciting new technology. But it was also an opportunity for you to build the infrastructure around this technology, so that so the market structure kind of evolves. And so, the paradigm the vision is kind of simple. It's simple but powerful. What we'd like to do is provide a single point of access so you can trade any asset with any dealer and clear it anywhere, right? So that's a simple statement, but it's actually very powerful, but it's also very difficult to implement in practice, right? So we provide users with customization at the asset level, the instrument level, the dealer level, but then also you can choose where you want to clear and settle the trade. Right now we support a couple of venues, but later this year we're going to be rapidly adding more venues. But the kind of innovation here, and I don't want to overuse that word, is the fact that we've peeled away the execution layer away from settlement, right? And because we've unbundled those two, it allows us to do things and offer a choice to customers in terms of how they want to piece together whatever preferences they have when they're sourcing liquidity. And I don't think this exists in the capital market, right? So having this like unbundled layer that can operate independently of the settlement layer, and then offer customers choice. I think that's pretty exciting because of how much value you can give to the customer. And to be one of the first companies to be doing that is kind of exciting. So that keeps us kind of going every day.
Finally, as you mentioned, infrastructures. To me, the trading activities in a space outpaced the underpinning infrastructures a little bit. So, what is your big step for Paradigm in terms of infrastructures?
So, we are an institutional grade platform, and like, most of basically everybody here on this call, I think it's really helped us that we've come from the old world. A lot of people in crypto seem to not want to like listen to the old world or not want to like, study the way people have solved problems before. We don't take that approach. There's many things in crypto that don't need to be reinvented, right? Infrastructures is basic things like circuit breakers and things like that are good for the market, right? And obviously the events from 2 weeks ago, which I'm sure we'll discuss in a bit, were clear. Basically, we're evidence towards that thesis, right? So what we try to do is everything we do, we try to see whether this has been done before. And if it has been done before, we study it and we try to take lessons from it. And then the other risk you run in this market is you try to take lessons from the old world and then try to map them to the new world or over map them to the new world, right? And that doesn't work either because this asset is natively digital. This thing didn't exist before when those systems were invented, right? So what we try to do is take lessons from the old world, and then obviously try and use our expertise and experience, and then also listen to our customers to see how we can apply to the new world, while also kind of keeping the user experience seamless, right? And then testing, tons and tons and tons of testing, even if it comes at the cost of time and speed. And I think that's kind of helped us, right? Especially because we're going to market with this idea of institutional grade. So it's something that we like to kind of put our stamp on before we release it.
Okay, thank you.
Okay, thank you, DC and Anand. So for the next 3 questions, Michael will be asking Itay. Michael.
Thanks, Yama. Hi, Itay. This is Michael here.
Hey.
First question would be, I use Curv today. Going from your favorite to least favorite.
Wow. It's like choosing between mom and dad.
Ignore the second part.
Yeah. Well, I will name 3 of the early adopters of MPC, which is the underlying cryptography that we're using. There was in the past year, you've been hearing more about MPC, and there was at least think of it a year from now, some leap of faith in believing that this is actually possible, right? I think today people recognize it, but I do want to mention 3 customers that were early on to both explore what MPC means, and MPC being multi-party computation, of course, and also partner with us to secure their assets. So one is Franklin Templeton. They're a Fortune 500 traditional financial institution, very large asset manager in the U.S., who's chosen Curv to secure their new money market fund that is going to be recorded on the Stellar network. Second is Genesis. I think everyone knows them. They're a leading OTC desk and an institutional trading firm, and they use Curv to secure all their assets and improve also their operational efficiency. And finally, eToro. They're a global trading platform, started from the Forex and then into securities and all assets. And today, crypto is a significant part of their portfolio. And they're using Curv to secure both their hot, their warm, and their cold wallet.
Right. Thank you. Thanks a lot. My second question would be, I read that last year, Curv announced a very exciting partnership with Munich Re, right? And offering insurance to Curv wallet holders. That's pretty exciting. Could you elaborate on the importance of that?
Sure. So let's say you're an exchange today or you're a custodian and you want to get insurance. If you go to an insurer, and usually these processes take 6 to 12 months. They come into your facility, they audit your cold storage facility if you have one, and it's a long process, and there's not many companies that are able to get into that part, and they want to say to represent to their customers that they are insured. So we have partnered with Munich Re, which is the world's largest reinsurer, very early on in the design process, and eventually got a very unique, first-of-its-kind insurance in which you have the largest ever policy underwritten by a single underwriter to an internet-connected wallet service. Remember that our service is internet-connected, it's delivered through the cloud. This type of coverage eventually enables customers to opt into this insurance, and it's primarily a validation of our technology and of the MPC security protocols because we were very thoroughly audited, and eventually are able to provide this to an insured solution to our customers.
Great, thanks. Last question, 2020, what's the big plan?
2020, well, 2020 has just started, and we've already seen several projects underway. Some of them we have already released to the market. Recently, we released multi-party computations for API key solution, in which you can protect the transfer of assets across wallets. We have customers who want to bring their own blockchain or using a blockchain that not necessarily all the others are using. So we have a black box wallet solution so that they can our signing into any blockchain, and we're adding support for additional tokens natively. This year we added Stellar, we added BSV, and yesterday we announced Hedera Hashgraph as one of the assets that we support on the platform. We are also building what we call smart wallets, or wallets in which you can interact with the rest of the ecosystem, including fiat banking relationships and KYC providers. So, for example, a client can use Curv to guarantee settlement, where a transaction is triggered upon receipt of funds or a collateral. And all of these new projects, with many more that are going to be announced soon, really bring innovation on the security layer. I think there's much to build there, and being a tech partner to our customers is very important to help them maintain both the speed and the control that they need.
Great, thanks. These are.
Yeah, thank you.
Thanks.
Yeah, thank you all. I hope you won't consider me as a lazy host. Moving on to our main discussion of tonight, recap March 12th, the Black Swan Day. So, Zach, again, tell us what actually happened to you and BlockFi that day.
Yeah, sure. So I think normally I'm sleeping pretty well, but for a few days there, I was maybe more like Anand and not getting too much sleep.
Mm-hmm.
But to give everyone some context, so at BlockFi, we can be successful basically with Bitcoin at any price except for zero. But we're much happier when the Bitcoin price is higher rather than lower. And although we're a U.S. domiciled company, we put a lot of effort into working with clients in China recently, as I mentioned. So I wanted to share, points on like the market structure stuff that happened, but also some specific things that we saw in the lending market with the audience. So obviously, the volatility of March 12th was primarily caused by a market-wide panic related to the spread of COVID and people, selling anything that they could possibly sell to move into dollars. Also on different crypto trading venues, you saw cascading liquidations on certain platforms that offer leverage trading. And then in the lending part of the universe, there were a lot of margin calls and also some disruption in the USD stablecoin lending flow from companies like BlockFi and Genesis Capital into Matrixport, Babel, Renminbit, and a couple other China-specific miners and exchanges. We had seen this disruption starting to happen a couple of weeks prior to the actual down move in the Bitcoin price, but that aggressive downward move on March 12th kind of accelerated this trend. So there's been a lot of money flowing from U.S.-based lenders into China-based lending platforms. And this has happened because BlockFi and Genesis both have grown a ton. And companies like Babel and Matrixport have realized that they can use their clients' collateral to tap into the U.S. lending markets and borrow dollars from folks like BlockFi and Genesis. For about a month before March 12th, market makers and hedge funds started outbidding Chinese lending platforms by paying upwards of 20% interest rates to arbitrage the contango that had developed in the futures market. So before March 12th, futures spreads were pretty wide, and they were in heavy contango. So we saw that this was causing a shortage of USD availability to the Chinese lending platforms, including probably to miners. And we think that forced some folks in this scenario to sell Bitcoin earlier than they would have otherwise had to if there wouldn't have been that lack of supply. And eventually these sales cascaded as some lenders and exchanges went into liquidation mode, and I think certainly there were some borrowers that had a hard time with that. On BlockFi's end, fortunately, we were able to maintain and actually grow all of our lending relationships. We worked proactively with all of our clients throughout the period of volatility, and also early on that week, we started hedging some of our positions because we were our risk management system was basically throwing a couple of flags about the market conditions. So we didn't sell any of our retail clients Bitcoin below a price of like 4,800, even though it went all the way down to below 4K for a short period of time. And we didn't liquidate any of our institutional clients' cryptocurrency, and we were able to be actively lending again into the market, both dollars and crypto, immediately the next day. So fortunately for us, and my hat goes off to my risk management team, they did a fantastic job. A little unique in terms of our perspective on lending markets.
Thank you, Zach. Well, I thought we all worry about price might go down to 2K or even zero. And amazing, I know that BlockFi even issued some new loans when the BTC hit 3,800. What was the sentence again? With every risky situation, there's always new business. Congratulations, Zach. Moving on. We know that Three Arrows Capital is a leading crypto hedge fund. Sue, yourself being a big crypto influencer and expert trader, it would be nice to hear your observations and opinions too. Hi, Sue.
Sure. So definitely agree that March 12th was driven by cascading liquidations on exchanges. I think the first move down from 7.9 to 6K and then it stayed there for a while, I think that was a regular, albeit large move lower. And when we saw contango come in pretty strongly at that point, we had already gone into flat curve, slight backwardation. And that was, I think, a normal-ish move. But I think the second move from 5.8 to 3.8, that was extremely fast and had a lot to do with market structure as well, and with the way that some exchanges were offline, with the way that it was already thin, and we had the coronavirus scare at the time. And it actually moved so quickly that I think even some market makers, especially those that are running leverage positions, one exchange versus another, I think one exchange, the highest volume exchange, BitMEX, it at some point went $1,000 below the other venues. And for the next day after all the liquidations, it was about $500 below every other venue. So I think about 85% of open interest was liquidated on that move. And for that percentage to get liquidated, market makers have to get liquidated because it's not all just retail clients. So we were pretty fortunate because we were, generally speaking, we were pretty conservative. We run more spot versus derivative arms. We don't try to run too many derivative versus derivative arms. That opens yourself up to a whole new kind of worms where you have to hope that the exchange doesn't liquidate you and doesn't have a mistake down. And so I think the market was already very over leveraged, as Zach mentioned, prior to the events. I think Contango went over 40%. The week before that, we were borrowing 20 with some guys, just getting very well because that's very profitable. When markets have tended to go into very, very steep contango, it's always a very worrying sign, especially if prices doesn't go up, because it means that there's not enough true fiat entering the system trying to swap goes up, borrowing money. So, and I think the miners were a bit trying to front run the halving, and I think that was always going to be something that if real money didn't come in to buy those coins, it's not going to be a narrative that works very well. I think also on the options side, we're a big investor in Deribit, and the options flow was really interesting that day. There were guys who had been selling a lot of puts or were suddenly coming into platforms like Paradigm and trying to buy, deep in the money puts that were out of the money, 5K puts that are suddenly now deep in the money, and they were buying these at walls of 300 or 350, and that's a sort of crazy capitulation that. People were underestimating the possibility of these moves, right? If you put it into a model, probability should be zero on any normal model. But of course, that's always a dangerous way to think about things because, as we saw with the U.S. jobless claims, it's now 10 times bigger than any previous jobless claims. And so, I think the best way is to always survive in all those situations. We had our best trading days ever during those days, and I think if you have a lot of people selling puts, that creates a lot of downward pressure, and then on top of that, you had the proof of storm of miners also borrowing, and then you had also the market makers themselves getting liquidated, trying to unwind their reverse derivative positions. I think all three of those are a good lesson to avoid leveraging and remain rather greedy.
Yeah, thank you. I think exchanges need to stop being too greedy. Since you also mentioned OTC, derivatives OTC, Anand, how were you impacted that day and what did you think of what had happened?
I hope it never happens again because, but I'm pretty sure it will. But, I think you guys just, did a fantastic job recapping what happened, right? I mean, if you have this exogenous kind of shock to the market, you have the market, super leveraged one way, and then you have, not so great market infrastructure that's not doing its job when it's supposed to, right? And so all that created this kind of cascading effect. All that, volatility was, for options was running, between 55 and 75, 136 a month, and like that was kind of the regime. After that, it's been 150 to in the 200 range, right? And when implied vols are that high, it just means that there's no volumes, right? And so, how were we impacted? Flows are down, right? And so, I think what happens is because of this let's call it, just use the word greed and a lack of basically a lack of willingness to do something about the market structure actually causes pain because it's liquidated everybody, so those retail guys are not going to come back. and it means lesser volumes for everybody, right? So everybody loses in this situation. So, but the good news is, I do think, as this walls are normalizing, market structures, not market structure, market dynamics are normalizing. We are seeing it come back. So I'm pretty sure it will come back pretty soon. And then, of course, we had the same time we had the financial markets, the traditional financial markets also. Obviously, that means less money overall for people to play with, and so it's bad for everybody. So I hope this doesn't happen again, and I do hope that market participants take more steps towards hardening this system and their own infrastructure to begin with. And then we're doing that as well, right? So every time this happens, we go back and we see, okay, what happened elsewhere? Can this happen on us? And if it can, then what can we do to make this better? And then test and test and test.
Yeah. Thank you, Anand. I think crypto world definitely needs more infrastructures, and Itay being of course, a very important infrastructure wallet. We know one of your biggest clients is already Genesis Capital. Already you mentioned it, and the leading lending platform. Could you please tell us from an institutional wallet perspective, what are your thoughts about March 12th, the market crash, Itay?
Yeah. So we were a technology partner to our customers, right? And at times like these, in which they need to make transactions, they need to get liquidity, they need to know that they can rely on the infrastructure that they're holding, especially in these times, right? So we need to show that we have full system resilience during those times. And actually on March 12th, we had, not surprisingly, since we kind of started ramping up in the summer, we saw a record transaction volume in our system that and based on availability, and customers were actually very active on the platform. And can you imagine that customers, before they were using us, they were using cold storage? So think of what you would do with storage solutions. Need to have people on facility in COVID-19 kind of day. They go back and forth into the cold storage facility to sign transactions in order to send and settle, right? The counterparties can't wait for the transaction. The customers can't wait. And you're dealing, instead of dealing with with operation procedures, happy to let you spikes on the following days, but all in all, it's a good validation for us of the product, and yeah.
Thank you all for your sharing. Very insightful. And actually, moving to our watch guest, DC, do you have any questions to our panel guest?
Yeah, question for I think this on March the 12th was a stress test for many market players in the crypto space. In which I think BlockFi did a very fantastic job. So my question is, could you talk a little bit about what do you have, what as of the risk management tools or risk management mechanisms you have at BlockFi that help your clients or users survive this black swan?
We believe that BlockFi are fundamentally in the risk management business. So, out of Renee, who previously was the managing director of structured lending on the prime brokerage side of Bank of America Merrill Lynch for 15 years. So he's been lending against securities and physical gold and SPACs and all kinds of different instruments, including throughout 2008, 2009. And he never lost a penny throughout any of those activities, including during the financial crisis. And fortunately, so far at BlockFi, we're in a similar position. We made our first loan in January of 2018. So we've lived through 40% up was, I think, the biggest single up day, and now 50% down in a 24-hour period is the biggest downswing. And we've never lost any capital throughout any of our lending activities. So what does the system do? We're now on version 4 of our system. The most basic thing that it does is it monitors every lending position that we have with either retail borrowers or institutional borrowers, and then the system takes certain actions based on price movements, which alter the loan-to-value collateralization ratio of those positions. Those actions can range from notifications or updates in a retail client's dashboard, all the way through to margin calls, and in some cases liquidations. So that's kind of like the customer communication part of the system. There's another part of the system that monitors market health. So it's connected to price feeds, it's connected to exchanges, and it uses tools to monitor things like depth of order books, liquidity availability, and it also pings OTC desks. So we try to get as holistic of a view as we can of liquidity availability and kind of market structure at different periods of time. And then the last thing is it monitors positions that BlockFi may put on as a hedge or just for making our own balance sheet. So we generate Bitcoin from lending Bitcoin and pay interest to our clients that are holding Bitcoin with us. And so every month we're creating Bitcoin that goes onto BlockFi's balance sheet, and so we have certain positions that we'll take with our own crypto and USD equity capital, and then we have other positions that we'll put on to hedge risk that we see in our different lending components based on certain market movements and changes in market structure. So that's what our system does.
Thank you.
Thank you.
Yeah, thank you. We know Hashkey invested in BlockFi, so DC is being a very supportive investor. So thumbs up to you. Thank you all. So I know, Michael, you must have a lot to share, but we will keep them for the next episode. So now please give us some conclusions as to end our discussions of tonight. Michael.
Sure. It's great to hear the insights from our friends here today. Again, thanks Yama for organizing this amazing event. Overall, conclusion-wise, I agree with our assessments on the crash. As Amber's CEO, my job, I always have to view risk management as a top priority internally, especially in markets like this. The big crash on the day, I think, stress tested a lot of the market participants' abilities and the infrastructure to manage risk. I mean, unfortunately, I would say some guys we know clearly failed the test. It's a bit unfortunate. I mean, some others barely survived, but sounds like, those of us who are on this panel, including us, Amber included, we did pretty well in moments like this. I think that really showed two differentiations and the real promises, for the companies on this panel, for guys who can really manage risk in those moments to really lead this young crypto industry into the future.
Thank you. I really thank you, Michael. So a very big thank you again to our fantastic guests, ChainNews and Winkrypto. Without you, Crypto Tonight would just not be possible. So now everyone, one very short sentence to say goodbye to our audience in China. Start with Zach again. One very short sentence.
One very short sentence.
Very short.
I'm more bullish on Bitcoin now than I ever have been.
Oh, that's good. Sue.
Nothing much to add. I guess thanks for the privilege of letting me share my thoughts with you guys, and hope you always take a long-term view as well as medium or short-term view if you must. But make sure that you bullish, then you make money when you're right. That's one of the things that is decided. If you're bullish, but then you don't make money when you're right.
Sue, I did mention very short. But anyway, next, Anand.
Nothing. Thank you for having us, and it's a real pleasure with sharing the stage and discussing with our clients. Some of you guys are our clients, but I think the short sentence is just stay safe, guys. We're in pretty uncertain times, and I think that's priority number one. Our families and all of that stuff comes first. So I hope everybody is staying safe and healthy, and we'll all get through this very quickly.
Thank you, Itay.
First of all, thanks, Yama, for organizing this. I think all the panel here, we all understand that we're still early days in crypto. These interesting times. We live in interesting times, and these times are the ones that are the tests to how we will perform in the next decade. So thanks again.
DC.
Yeah, firstly, I echo everyone's thanks to Yama and ChainNews for putting everyone together for this show. I have 4 words for everybody. In the like everybody said in the early industry, play safe and live long.
Very smart. Okay, Michael.
Sure. Again, thanks everyone. Thanks Yama and ChainNews for this event. I'll keep it short. I really believe crypto finance is destined to come, so we better start embracing it.
Thank you, guys. Thank you again. So next time I will just limit like 10 words, no more than 10 words, so everyone will stick to the rule. But anyway, thank you. It has been really nice to have you here, and I'm sure like we already have like I guess like 700 people are watching this live. So thank you, thank you again. So I look forward to seeing you again maybe next Friday 8 p.m. Good night from Beijing, guys. Stay safe. Have a nice day.
Take care, guys.
Bye. Good night.
Bye.
Bye. Bye.
Thank you.
Bye.